Welcome back to the channel. Today we are looking at an very interesting stock. It's because today we are diving deep into one of the most interesting stocks at the moment. It's ServiceNow, of course. Ticker symbol NOW on the New York Stock Exchange. And this is a stock that is really going to benefit in the future because of AI. So this is my argument of why this should be in your portfolio. This is for informational purposes only. It's not financial advice, plus past performance does not guarantee results in the future. Just make sure. So we have a lot of slides today. We got the company overview, we got business model, financials, growth, customer metrics, bear and bull case valuation, and the 2030 roadmap. We have a lot of things to go through today. So let's just go to the next slide, right? So first of all, the company overview. So ServiceNow was founded back in 2004 in Santa Clara in California. So this ServiceNow is not a B2C company, it's more of a B2B company. They got about 8,700 enterprise customers, with about 85% of that being in the Fortune. No, not 85% of that, but 85% of the Fortune 500 companies, they use ServiceNow. But why? It's because it's a cloud platform, right? Where everything is in one place. You've got like the IT department, you got the HR department, finance teams, security operations, and customer service. So traditionally, these like sectors or divisions, they run separately. But in ServiceNow, they are all like glued together in one system. And the most important man in AI at the moment, Jensen Huang, the CEO of NVIDIA and the founder, by the way, he said that the AI OS for the enterprise. So ServiceNow is the AI operating system for the enterprise. Just that the CEO of NVIDIA are saying this already says a lot about ServiceNow. Just a fun fact here, it's the fastest SaaS company to ever reach 1 billion, 5 billion and 10 billion organically in revenue. And for the fiscal year 2025, it was 13.3 billion in revenue. They got a 98% renewal rate, which is absolutely insane. So what about this business model? First of all, they got the subscription, the SaaS here, 96% recurring revenue, which is absolutely, and we like recurring revenue because people are paying upfront, so it's more predictable income. But the company is built into like three layers. We got the first one, which is the subscription SaaS, which I just talked about. The second one is the platform architecture. We got the IT, HR, finance, security, and the customer service. For every time like a company integrates one of these into the ecosystem of the company, it makes it harder for them to leave ServiceNow, which is great if you are ServiceNow. And the third one is the land and expand. So normally ServiceNow enters a company via the IT section, and when they do that, they are selling the other systems, the other sections. And when the company starts to integrate each one of these, it just deepens to another level. And the average customer at the moment runs 4+ products from ServiceNow. And the net revenue retention consistently above 120%, which means that the customers are spending more and more every year. Existing customers, of course. And on top of all of these three business models, they got a fourth now, which is the AI. They got one called the Now Assists, which is their AI product. Let's have a look at the financials. So the blue pillar is the revenue, and the dark blue pillar is the free cash flow in billions, of course. 2025, $1 billion in revenue and $1 billion in cash flow. 6 billion, 7 billion, 9 billion, 11 billion, and 13 billion. So their revenue has grown 194% since 2020. Absolutely great. And the non-GAAP earnings per share went from $3 to about $19 in 2025. Amazing. The free cash flow growth is growing faster than the revenue growth, which is even more impressive. We like free cash flow because that's what the company used to pay out dividends, to buy back shares, to reinvest into the business. So that's really an important one. The non-GAAP earnings per share growth is 459%, insane. And the free cash flow margin is about 35%, which is, it's all right. So if we take a deeper look into the revenue growth, the last 3 years we got about 20% revenue growth organically, and the estimates for 2026 is $16 billion or more. So that's about 20% again this year, which is good. So this is where ServiceNow they're really better than all the other SaaS companies. Now it's getting technical, okay guys? There are remaining performance obligations, I believe it's called, the total RPO. It's future revenue or future contracted revenue that hasn't been recognized yet. I didn't know this, but this hasn't been recognized yet. It's like a backlog. The total RPO in Q4 2025 is $28 billion. That's insane. It's revenue on contract that hasn't been recognized yet. And this is what makes the revenue so predictable, because even if they don't sign any new customers, they would still grow their revenue for the next 2 years, which is... Now, this is the most important one, because this is the AI strategy. How are we going to... AI is the future, right? We all know AI is the future, but how is ServiceNow going to integrate this AI? That's with the Now Assist. Now Assist and agentic AI. So Now Assist has generated about $600 million in annual contract value in 2025. They are targeting about $1 billion in annual contracted value in 2026. So that's 500 million just from the AI Now Assist. A couple of years ago, this Now Assist didn't exist. Now it's about $1 billion in revenue alone, just from this product. Besides that, ServiceNow are making an agentic AI platform, which is a lot of pre-configured AI agents that can be used in if you have the SaaS subscription or the other platform where you got like the IT division, you got an AI agent for that, you got for the finance team, you got for the HR, for the whatever you can cross them. It's just a lot of pre-configured AI agents you can use. 95 billion workflows processed through ServiceNow system every year. So the AI doesn't recommend actions, it also executes them, right? So normal AI chatbot, it finds the patterns, it does whatever. ServiceNow, they execute them. And last thing, it's model agnostic, which means it works with OpenAI, Claude, Gemini, whatever. So it can be used in a lot of ways. So how big is the market for ServiceNow? So if we have a look at it, the total addressable market is 275 billion in 2026, which means it's growing about 20% a year. So today they only got about 5% of today's market, which is, it's good. It means that even if this market grows, that ServiceNow will of course grow with it, but it has to penetrate more of the market. That's why they're trying to expand into new verticals like the CRM industry, like government, healthcare, whatever they can, they are doing. Most importantly, the management has a target of $30 billion in revenue by 2030. So that's about 20% organically growth in revenue for the next 4 to 5 years. Then we got the competitive positioning. Okay, so we got Salesforce, we got SAP, and we got Microsoft. Unified workflow platform, it's only ServiceNow. So Salesforce is of course CRM, Microsoft has Copilot, renewal rate 98%, they got 85, they got 80, they got 88. Agentic AI, like they partially have that. Salesforce is building some AI stuff as well, I know. Microsoft is of course as well. Model agnostic architecture, it's only ServiceNow. IT, HR, finance, and security, everything in one. Salesforce only got CRM. SAP only got ERP. Microsoft fragmented. We have a look at the customer and retention metrics. This was like, it's alright. We got the 98% renewal rate. We knew that. We got 2,100 customers paying more than $1 million a year to ServiceNow. 528 customers spending more than $5 million a year, which is insane. 85% of the Fortune 500 they are covering. Nice. The net revenue retention is 120%. That means every year the average customer is spending about 20% more than the year before. And of course 8,700 enterprise customers. Now let's talk about the moat. This is why the customers don't leave and why the competitors can't enter. There are 4 layers here: switching cost, platform, network effects, partner ecosystem, and proprietary data mode. So switching costs. So it's embedded in mission critical workflow. So if you are trying to replace ServiceNow and you got ServiceNow products in the IT, finance, HR, it's going to take years to migrate that into another system because there is no other system. So it has to be either 3 different system you have to use and migrate everything into. Which means if you're going to do that, migrate one system into 3 systems, then it would take a lot of costs, and it's going to be a risk if something happens. So that's not going to work. And platform network effects is just that the new models is worth more than the old ones, and yeah, it doesn't really matter. Partner ecosystem, they got about 10,000 tech and implementation partners, 9,000 marketplace apps. So all of these people are invested into the platform and they are locked in. They are locked in like that. Proprietary data mode, 95 billion workflows a year. It's a lot of workflows, and it's being processed every year, and it's unique data that nobody else has. And that data, it trains the Now Assist AI, so the Now Assist is going to be even better. One thing I like the most about ServiceNow is the M&A, the mergers and acquisitions. So in 2025, they bought MoveWorks for $2.85 billion. It's like it deepens the HR, section and the service desk AI, because it had MoveWorks had 500 AI agents. They are quite deep into the HR section, which is great. So yeah, then they bought Armis for 7.8 billion. It's a cyber physical security platform. So Armis was already at 300 million in annual recurring revenue when they bought them. So this means a lot for the company because they were already growing, and they are really into the healthcare and finance type. And then they are trying to buy Vesa for about $1 billion. Not really sure yet, but yeah, it's going to be great. Then we got the key partners, of course. We got Nvidia, Jensen Huang. It's very important. Whatever he says, not Jensen Huang Jensen, of course. Whatever he says, it triggers the market, right? We got Microsoft, of course, a big player. We got I've never pronounced this right. Accenture, I'm not sure. We got Anthropic, of course, Google Cloud, SAP, and Workday. The 2030 roadmap. Management want to get ServiceNow to $30 billion in revenue in 2030. It's because they are depending on the Now Assist is reaching about $1 billion in annual contracted value. Then we got in 2027, next year, we got the security and AI scale. We got in 28, we got the CRM at full scale, the customer service, right? And then in 2030, they are planning on full platform dominance. So what are the risks at investing in ServiceNow at the moment? First of all, it's a pretty high valuation, to be honest with you. It's about 40 to 50 forward earnings, not a PE, but a forward PE. If growth slows or the margin decreases, this forward earnings of 40 to 50 is going to there's a risk it can be crossed. Then we got intensifying competition. Players like Salesforce are investing into AI. Microsoft is trying to build their own. SAP all expanding. Very nice. Not that nice for ServiceNow, but yeah. We got AI execution risk, like the Now Assist. The AI thing has to bring in more annual contracted value. We got the macro and IT spending. Yeah, blah 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 blah. M&A integration risk. It's all good. All looking good. So the valuation trades about of 13.5. In this picture I put a 14. Forward revenue compared to other people in the space like Salesforce is trading at 7 forward revenue. SAP 7, Workday 8, and the sector average 8, of course. Yeah, this is justified that they got 20% organic revenue growth. They got 98% renewal rate, which is insane. Massive RPO. They got insane margin, which is expanding. And the AI monetization is still a little bit. It's just a small piece of the pie yet. Of all the Wall Street analysts, the 39 of them, 74% of them says it's a buy rating, and they got an average target of about $1,154 a share. Maybe I wrote something wrong here because that is not looking right at all. Guys, this is not right. I'm not sure what I've done here, but this is not right. Let's skip that one. But the bull case. So Now Assist, the AI one, can hit 2 billion in annual contracted value by 2027, which is a big increase. We got the international expansions. We got security. TAM opens up. Army's integration, which is nice. We got margin expansion. They are reaching for 40% in free cash flow margin. Plus our CRM product is starting to take market share from Salesforce. And they are going for about $30 billion in revenue by 2030, which is nice. They are aiming for about 20% in annual revenue growth organically, and about 2 to 3% every year from the acquisitions. The bear case, what has to go wrong? The AI monetization stalls. Now Assist doesn't get any new contracts. If growth slows, let's say to 10% revenue growth, your forward PE of 40 to 50 is not looking good. It has to drop to between 20 to 30, to be honest with you, which is absolutely bad. Then we got the Microsoft bundling threat. You got like Teams, Copilot, M365, which when bundled, it now undercuts ServiceNow. So let's see about that. We got the mergers and acquisitions. Armors and MoveWorks integrations fail. What if they do? Then the margins miss. And the two in the bottom is like the geopolitical things, doesn't really matter. What do you have to look for? We got a market, total accessible market, 275 billion. Today, they only got 5% of that. That could do better. But the organic growth is about 20% for the last 5 years. 98% renewal rate, which is absolutely huge. We got the AR section of the company. The Now Assist is approaching $1 billion in annual contract value, which is going to be even better because that's better margins because it's AI. We got Armies plus MoveWorks acquisitions are going to expand the total accessible market and deepen the moat because these are in categories that ServiceNow at the moment is not in. Plus they had a $5 billion buyback program, which they're going to buy back a lot of shares, which is great because then your little piece of the pie is going to be worth even more. So that's great. And the one on the bottom, I'm still not sure about. I'm not really sure what I've done here. So what are the price tag projections? So if let's say that ServiceNow with AI, with the mergers and acquisitions, whatever, from today and all the way to 2031, they're going to grow the revenue a lot. The AR is inflected, margin is getting better, whatever. Plus they hit the targets of the revenue, then we could see that the stock would grow at an annual compound rate of about 25%, which is, it's all right. It's better than the market. So if growth just sustained like it is today, the 20%, it didn't grow anymore, and the multiple would be the same, the 40 to 50, then we could in 2031 look at a price tag of about $311, which is still a total return of 129%. Better case, growth slows, the multiple is being compressed, whatever. It's looking bad for ServiceNow. Then we could in 5 years only see about a 5% annual growth. Not that good. So we're looking at 174. So you should do your own research, of course, but this was my take on ServiceNow. So do your own research, leave a like, and write a comment. I bought ServiceNow for, I believe it was about a week or two ago, but I believe since then it's grown about like at 10% or something like that. But thank you guys so much for watching. Bye bye.